Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Thursday, the 16th of October, 2015. Hope you're having a good week. We had, after several days in a row of nice gains for us, we had less in terms of trading action, kind of a mixed bag, 50-50, a few winners, few losers. After the market gapped down huge yesterday, we'll look at that gap, or on Wednesday, we'll look at that gap in a moment. But big gap days are never, I always say it coming in, they're never the most exciting. It either ruins your plays in the direction of the gap because you gap past most of them, and we did that, and now you got, are you going to turn into like a gap and go session, or are you going to go back and fill the gap? In this case, we tried a little bit of both, as you'll see. So it wasn't really a clean, straightforward trading day like we've been having. And that is common, and that's fine. Not a problem. But we're going to look at the ES here. This is the net results of the ES futures contract front month for the session. And by the way, this is including some action that's occurred here after the market. We'll look at that in just a moment. So here's the S&P cash instead. Let's flip to this and take a look. You can see that there's a small gap down that never filled. We traded much lower. We did make it back some late in the day. But that's probably not going to hold come tomorrow, and I'll show you why in a moment. Here's a look at the NASDAQ side, which gapped down even further, went lower, came back up, went lower again. We'll look at that again intraday in a moment. But yeah, we've continued lower. Bottom line is the S&P lost 15, NDX lost 24. NASDAQ volume was pretty good. And let's take a look at the volume chart real quick. We got 2.8 billion shares on the NASDAQ. That's the best in a while. It's the best since triple expiration back in March, which is common. I told you guys, once you get past August, volume picks up again and keeps going. Look at that average, 10-day average of volume now, almost 2.2 billion shares, heading towards the high of the year, and that's when trading is good. That's why we always like to tell people the October through April are the best, and April to October can be a little light, especially August. I'm going to skip looking at a bunch of other charts for the moment. Let's look at the oil futures contract that hit 80 today. Again, new lows on the oil futures, and so down once again. And also take a look at the VIX, which was up again today. Came back a bit from the highs, but it did get over 30 at one point in time today. Before I go into the intraday action and show you what it looked like, I do want to real quick take a look at Netflix here and go to a 24-hour chart so you can see what happened just now in the aftermarket here of Netflix. Here's a look at it. Earnings came out, and yes, that's right, Netflix down 120 points currently. And what has that done to the futures out there? Let's take a look at that real quick. Here's the ES heading down a little bit since the close, but also the NQs where the NASDAQ or where Netflix has more of an impact, obviously down a bit more. Probably will have a negative impact tomorrow on the broad market. And this is why we say it all the time. The 8 days of core earnings are so important, so different. If you look at this Netflix chart, obviously the markets were down today. Netflix actually made it all the way back to green territory. It was up for the day by the end. Like there was nothing wrong, like there was nothing going to be in that earnings report that was that startling or that the market would hate. No rumors of anything, and then down 125 points. So we don't trade the post-market, we don't trade the pre-market, but we don't hold stocks through earnings. And of course, Netflix gapping will have an impact on the broad market and on other stocks in the sector. So this is why we say the core 8 days of earnings are so different than the rest of the trading environment. All right. So now let's go to 5-minute chart of the futures from today and really analyze what happened. So again, we gapped down, we pushed lower for the first 10-15 minutes, came back up, and we made it back. That high of the day there on the ES is exactly the 50% retracement from the close of Tuesday to the open of Wednesday. So that's the high of the morning there. Stalled out right at that level, came back, and then over lunch rolled even lower, broke the lows. We had a winner and a win, which I thought was the cleanest pattern of the day, and it made us some money on the short side. I'll show you that in a moment. And then bounced off those lows as we came into the last 2 hours, actually came back up towards the high of the day, and then rolled over, never filled the gap, rolled over, and came back very close to the VWAP for the close. Now here's a look at the NASDAQ side. Basically did the same thing, not much different. Almost looks a little less volatile. I also wanted to show you, if I switch this to show you the market directional tool. This is always worth a laugh to me. This is our Tradesight Market Directional tool, and the final print of the day. Oh, sorry, it's already printing today's post-market stuff. So the final print of the day actually ended up right on the midpoint of the session. I'm sorry, on the opening level and the midpoint of the session. It was market direction yellow. There's one tick of the day, 45 points of range, which is 180 ticks, and there's one tick of the day where market direction can be considered perfectly neutral, which is on the middle of our three market directional lines, and we closed right on that number. That's absolutely remarkable as far as I'm concerned. And that's, again, not uncommon when you realize that we had a big gap in the market. It doesn't lead to a lot of clarity. So hopefully tomorrow, I would like to say hopefully not a gap, but obviously we've got some big economic data in the morning, which includes we've got initial and continuing jobless claims, industrial production capacity utilization. That's all before the bell. Philly Fed and housing market index 30 minutes in. Natty gas, crude oil inventories, treasury budget all tomorrow. Friday, we've got housing starts, building permits, and Michigan sentiment. So between the earnings like Netflix, plus any other earnings, plus earnings tomorrow before the bell, plus all this economic data, of course, we're most likely to get a gap in this environment. Obviously, people are on edge. The margin calls maybe potentially building up as we head lower here in the market. Could lead to a little panic. I don't think we've really seen panic yet at all. You get the VIX over 40, that's when you're in panic mode. So, I think that, again, you got to be cautious. You got to play the short side a little stronger than the long side. If the market direction's green and you got a good long setup, you can take it, but make sure you monitor that trade carefully. And again, be really careful. I wouldn't hold anything overnight here in the middle of core earnings season. And watch out for the last 30 minutes where it's a lot of trading based on rumors. Obviously, we get a lull Friday and Monday because of less earnings, and then we come back at it for the last 3 days, Tuesday, Wednesday, Thursday. This was also options unraveling potentially here on Wednesday. You could potentially say that that's what that move down was, although when you get an options unraveling move, it should pick one direction and stick with it. The fact that we rallied back this afternoon wouldn't really bode well for that being a pure options unraveling move, which means it might still happen Thursday. Obviously, we've got the volatility right now with all these earnings, the Ebola virus, everything that's going on. So all we really care about is continuing to see this volatility. We'd just like to do it without the gaps being too big that they make the day harder to trade, because you don't know whether you're getting that gap and go or the fill when the gap is too big. So that's it. We'll be calling it in the lab as usual, and we're trading Thursday. Obviously, Friday has the potential to at least do something, even though it's a Friday and it's options expiration. Usually that would be dull, but with everything that's going on in the world, we might be able to get something done Friday as well. So it's been a nice run here, and hope to see you in the trading lab. Charts as usual brought to you by eSignal 11.